Welcome to the Live Wealthy podcast with Dawn, where we are growing our wealth and our worth at the same time. You ready? Let's go. My name is Dawn. I'm a certified financial planner, a behavioral financial advisor, and the CEO of a wealth advisory firm called Relevé Financial Group. And what if I told you you could keep more of your income, reduce your tax bill, grow your retirement plan significantly faster, and build long-term wealth, all wealth playing and following by all the rules? Well, this strategy I want to talk about today is called entity stacking. Most of you have never heard of this before, but I'm here to tell you it's a game changer. And on today's episode, I'm going to pull back the curtains on how to structure multiple LLCs so you can build tax efficient wealth for your family. So if you are a business owner, if you are a consultant, a coach, an entrepreneur, and do not have W-2 income as your total income, you don't want to miss this episode. So what is entity stacking? Entity stacking is about forming and creating multiple LLCs so you can organize your income, reduce your taxes, and build wealth. This strategy is for high income earners, either earning income yourself if you're single, or high income couples. Okay. So it's about creating these multiple LLCs so you can stack and organize your income to get better tax write-offs and more money in your pocket. So why is this important? Well, it's important because we all pay, in my opinion, way too much in taxes. Taxes are our largest expense in life, and we all want to learn strategies on how to minimize our tax bill. So what the issue is then is that we need to learn how to organize our income so we can have better tax write-offs and turn that money that you were paying the IRS, and taking that same amount of money, maybe half of what you're paying the IRS or a third of what you're paying the IRS, because we still have to pay our taxes, but we can minimize our tax bill. So let's say if we could take a third or half of what we're paying the IRS and take that money and place that into a retirement plan for either yourself or your spouse, get that as a tax deduction on top of additional other tax deductions, and have that money that instead of paying the IRS, you're actually putting it away in an investment to pay yourself in the future. In fact, this strategy that I am implementing in my own household with my husband is over $1 million strategy. In fact, we are taking approximately $88,000 of what we would be paying the IRS and turning that money into a retirement asset. That same $88,000, instead of paying the IRS, we're turning it into putting that same $88,000 into a retirement plan, and then being able to watch that retirement plan with proper diversification and investment strategy, watch that grow year after year after year. And that turns into over $1 million before I retire, before my husband retires. That's why it's so important, is because we want to turn tax dollars into our dollars so we can have more money in our pocket, so we can do the things that are important to us and our family. So what does this structure actually look like for my household? Before I tell you what this looks like and how we are creating this structure, I do want to put a disclaimer out there. Remember, my household, my husband and I, our goals are different than your goals. Our income is different than your income. Our tax bracket is different than your tax bracket. So what I want to tell you is that this is what's working in our household. And I want to make sure that you actually put together the right type of team. When I say right type of team, it means you have to implement. It's about implementing a full-on personal financial plan. It's about having the right financial advisor. It's about having the right tax advisor. It's about having the right investment advisor to make this strategy work for you. I would not try to implement this on your own. And if you want a second opinion, if your CPA that you're working with isn't giving you these tax strategies, I would encourage you to give us an opportunity to review your situation and allow us to give you some strategies to see if it would work out in your particular situation. But in mine, this is over $1 million tax strategy. But I'll tell you, without a full comprehensive financial plan, you could end up with a tax headache over a tax break. Okay, so how am I implementing this in my own family household with my husband? So I have a business, Relevé Financial Group, that I obviously over 25 years get a healthy income from. Now, I was told years ago not to hire my spouse because it would just create extra what's called FICA tax, which is Social Security and Medicare tax, that it would create extra tax for us because we file a joint return. So I shouldn't even hire my husband. So even though he's doing work for me, I shouldn't hire him. Well, guess what? That was lazy tax advice, even from a CPA. So if you're getting lazy tax advice or your CPA isn't being proactive with these tax strategies for you, and you are a high income earner and have LLCs and a small business or a large business and have anything besides just W-2 income, let's have a conversation. We are taking a portion of my income and all I'm doing, like, by the way, so I get paid an income, it all goes into my personal checking account. Well, instead, what we're going to do is we're going to take, instead of all of that income going to me, I'm actually going to have that income go to my husband. And by the way, this is a legal and legit strategy because my husband legally and legitimately works in my business. He creates and produces the podcast. He manages and is the leader for our marketing plan. He actually owns all of the changes on the 2 websites that I have. He sits as a board of director and literally sits as a board of director and gives me strategies on how to be a better CEO in my business because him and I think very differently. But I'll tell you, ever since I've implemented his strategies in my business has grown by double digits. It's crazy, double-digit rate of returns growth year after year because I'm implementing the strategies he's given me. So I should be paying him, right? But I haven't because I got really shitty tax advice previously. I got dangerous enough to learn more of the tax code and the strategies that are available to me. So here's what we're doing now. This is my $1 million strategy. I'm actually paying him as a contractor. And by the way, you go and Google or ChatGPT, look up the difference between an employee and a contractor because you have to legitimately and legally follow the rules. But I hire him now as a contractor. So I pay him a salary, not a salary. I pay him contractor income through my Relevé Financial Group business. That money goes into his new LLC. Now he is a business owner himself. He is the single person in his own silo LLC. Underneath his LLC, then he just takes that income and places that in a portion of that income back in our personal joint checking account as we're living off of that income. But you know what else he's doing? He's actually now, because he's a single business owner, single entrepreneur, he gets to open up something called a solo 401k. He gets to put an employer and an employee contribution into his solo 401k, which then allows him, because he's old, he's over 50, he can put over $77,000 into that single 401k and get a $77,000 tax write-off. And on top of that $77,000 tax write-off, he can also do a little what's called a backdoor Roth contribution and get money growing tax-free moving forward over the next 8+ years before we retire. So you can get another $8,000 into a Roth backdoor Roth contribution. And so on top of him having this $88,000 money going into a retirement plan, out of the 88,000 going into two retirement plans, 77,000 is a tax write-off. But then he gets all these ancillary, these additional tax write-offs that we did not qualify for before. Well, so what are these tax write-offs? The home office expense, all the ancillary additional expenses that go along with a home office, like the property tax and the homeowners association and the homeowners insurance. Like, we're getting multiple write-offs for his own dedicated workspace. He can write off a portion of his car payment now that's connected to driving that car for business. He gets to write off the Augusta rule, like huge tax deduction there, right? So he gets all of these. I mean, that's just a few of the tax deductions. There's also health benefits he gets from, tax deduction, health benefits that now become, health expenses that now become tax deductions, right? So you start adding that on top of the retirement plan. What happens is that the $88,000 that I was paying the IRS on top of the extra money that I'm paying the IRS. I am not just paying the IRS $88,000 a year. I'm paying them more, but I'm taking $88,000 that I would be paying the IRS, sliding that over to his LLC, and he gets that same $88,000 going into a retirement plan, and it doesn't cost me any additional outlay of money, no additional cash flow going out of my personal pocketbook to do this. So I'm taking tax dollars and funding a retirement plan for him, of which over the next 8 to 10 years turns into more than $1 million invested with a proper, of course, I can't guarantee investments, but working with my investment team, I can look at historical investment rate of returns. I mean, even if I get a 6, 7, 8% rate of return, in fact, I've done the math, even a 4 or 5%, it's still over $1 million strategy, assuming those rate of returns. And of course, it's an assumption. I can't predict investments in the future, but what I can do is based on historical performance, that's what I am anticipating for him to have underneath the umbrella of his solo 401k and his Roth IRAs, because we do it year and year and year, over and over and over again. I mean, this is a huge strategy. Okay. So if you are a business owner, a high income couple, and you need to start thinking like the wealthy does, how the wealthy thinks. So if you want to help build your wealth, you want a second opinion, click the link, fill out that financial assessment that may lead you to a complimentary call with myself or my team, where we can help give you a second opinion on your strategies or learn more about your particular situation and see if we can put tens of thousands of dollars, hundreds of thousands of dollars in tax savings, and then take that money and start to invest it in a diversified portfolio and get that money working for you. Okay. So if you want clarity on how to stack your income and start saving smarter, just like Gary and I are doing, click that financial assessment below and let's get started. Because building wealth, as I always say, isn't about working harder. It's about being smarter with the income you've already earned. And that's what it means to live wealthy.